Tech buyers cashed in on the Nasdaq dip Tuesday, but further analysis shows more downside for Apple. Yeah, that may be on the horizon here. For more on this, we've got Yahoo Finance's Blikre joining us now from the floor of the New York Stock Exchange. I guess Stacks Exchange works too. Jared, just go
when
ahead.
In Rome.
Yes.
Let's go to the Wi-Fi Interactive and move on here. I was looking at the Nasdaq 100, and we'll get to Apple in a second because Apple is the biggest component of the Nasdaq 100. But just wanted to show you what this tech mega cap heavy index has been doing. This is a 3-month chart. It's hard to see here, but this candle yesterday was a hammer candle, and it's protecting. It's showing that the 15,200 area was rejected, although 15,300 remains a sticking point. If you take a look at 1-year chart here, you can see this is kind of price for perfection here. It's one of those mornings. We did pick up interest right where we should have at the bottom end of this trend line here. But in as much as the biggest component is Apple, and Apple has not been doing well recently, you take a look at the 5-day price action, down 7.1%. This is a stock that has an even steeper trend line. Look at this trend. This goes back 1 year, but since January, almost a perfect uptrend here. And when it broke 4 or 5 sessions ago, and I'm going to zoom in here, it really broke hard. In fact, this was a record high. It's hard to see up there, but a record high. Only 5 days later, this guy was oversold. Apple was oversold to the downside versus relative strength index. That's RSI. It's a common measure of overbought, oversold. I don't want to get too deep in the technicals here, but I went back through history and I found that this has never happened before. In other words, we've never had a record high in Apple and then it crashed to oversold territory within 5 sessions. So I expanded the parameters a little bit, just required it to close above a 10-day moving average and then get into oversold territory within 10 days. And guess what I found here? It's generally bearish for Apple in the following 5 days, 10 days, and 21 days. So that's 1 week, 2 week, and 1 month. In fact, here are the stats here. 9 times in history, and 6 of these came after the year 2000, going all the way back to the 1980 IPO of Apple, and we find that 1 week later, the average and median gains were negative. 2 weeks later, average is negative, although the median is positive. But some of these percentages are pretty bad. A 33% positivity rate for 1 week later is very low, considering this is a very bullish stock, and it has been a very bullish stock for the better part of the last 2 decades. So all of this tells me right now is that if Apple does not participate in this rally, it's going to be difficult for the Nasdaq 100 to hold its footing. And what does that mean for the rest of the stocks? Well, I was saying yesterday that it looks like we've been in a kind of a 10-day either consolidation or back off from highs or a rotation. Here's the 5-day price action. You can see while Apple down 7%, meanwhile, Amazon is up 8%. So there are winners and losers in this game. And actually over the last 5 days, Energy's breast broke to the upside. Then we have XLY, that's retail and Amazon, and then healthcare. We had a huge day in a couple of healthcare stocks yesterday, the Ozempic maker, as well as Eli Lilly. Just take a look at what's happening with energy. I'm going to put a 3-month chart on here with some candlesticks, and you can see today we broke above this resistance here, above 88 for the first time in quite a while. Let me just put a 2-year chart so we can see this. There's a lot of overhead supply still in the market here for XLE, but we get a little bit higher and it could be off to the races. Also taking a look at financials, despite yesterday's downgrade that we've been talking about of Moody's on the regional banks, financials have been relatively strong. Here's a 5-day chart, and you can see marching up from that initial sell-off yesterday. So I wouldn't cut out the financials here or count out the financials. Healthcare picking up, energy picking up, perhaps to the detriment of some of those big tech stocks like Apple that we've been talking about. But overall, as long as we see rotation in the rally, it probably means that the S&P 500, which is a broader mix, will at least hold water, if not advance.
Jared, thanks a lot. Appreciate it. Deep dive there. Appreciate that.